Well, after the discussions related to analysis, specifically the history of technical analysis, we want to talk about the definitions, concepts, and principles of technical analysis. Regarding this topic, we need to know what technical analysis actually is and what it is supposed to accomplish. To define technical analysis, I must first tell you, dear ones, that there are two very important analytical methods in the capital market. We refer to them as technical analysis, which is the very course we are currently in, and fundamental analysis, or the fundamental analysis of the capital market. Perhaps the first question that comes to your mind is, well, which of these two analytical methods is better? Which one should I learn? In response to this question, I must tell you, dear ones, always remember that you should never compare the technical and fundamental analytical methods with each other. These two analytical methods complement each other and together provide you with a very strong basis for decision making. So, in fact, technical analysis and fundamental analysis will help you together, and I strongly recommend that you learn and use fundamental analysis alongside technical analysis. But what is the difference between technical analysis and fundamental analysis? Before I present the definitions of technical and fundamental analysis, which you can see on this slide behind me, I'll give a very simple example, so you can more fully understand. What does technical analysis talk about, and what is its difference from fundamental analysis? The example I'm going to give is the dinner table example. In the dinner table example, assume that there is a table with a variety of foods on it, and a group of technical and fundamental analysts are supposed to make use of these foods. Always remember that fundamentalists or fundamental analysts go for foods that are healthier, meaning foods that have nutritional value, foods that are nutritious. Healthy foods also exist in the capital market, like companies that are operating healthily and have very good profitability. Their process is growing completely routinely. Well, fundamental analysts go for these foods. In the capital market, fundamental analysts go for these companies and these stocks. But technical analysts are always looking for foods that have more appeal to the market. The market has a bigger appetite for these foods, and it doesn't matter to them whether these foods are healthy or not. What matters is the appetite for that food. It's the same in the capital market. There are some companies that don't perform very well. They don't have excellent performance, but their stock is growing very well in the market and is moving upwards nicely. What does this mean? It means that there is a big appetite for this stock or this in the capital market. For a technical analyst, that stock is important, not the stock of a company that is performing well. So you need to be aware that the difference between technical and fundamental analysis is like this. But now, which one should we use? We should use these two together. This means we should always pay attention to companies that are operating healthily, companies that have no tax violations, companies that haven't faced difficult conditions, and companies that are not on the verge of bankruptcy. Companies whose operations are completely stable and healthy in the capital market and are growing. Now, we should consider these companies, but we must also be fully aware of those companies that have a lot of appetite in the market. This means, as a fundamental analyst, with a technical perspective, we should be able to capture the best stock in the market. In this regard, you can see that technical analysts, or in other words, if we want to define technical analysis, we say technical analysis is a method that tries to study the overall behavior of a stock by examining its past price trends, historical patterns, and past trading volumes. This is important, guys, to predict the future price of that stock. What does stock behavior mean? It means the increased market appetite for the stock. It means the event that is happening to the stock right now, making it appear attractive in the market. How can I analyze this behavior? I can actually assess this behavior using the stock's past price trends and historical patterns and its trading volume as we move forward. These are referred to as some of the principles of technical analysis, which we will discuss more about. However, fundamental analysis of the capital market does not use these. Fundamental analysis of the capital market uses the financial statements of companies. It uses competitor analysis. It uses competitive advantages, and most importantly, it determines the intrinsic value of the stock. That is, by using the EPS of the stock or the earnings per share, it arrives at the intrinsic value of that stock and uses the intrinsic value to determine whether the stock is valuable or not. Now, how can one determine if a stock is beneficial using its intrinsic value? Look, let me give you an example. For instance, the stock of Iran Khodro Company, the current market value of this stock is, for example, 438 rials. Let's give an example. 438 rials is the stock price of Iran Khodro Company. A fundamental analyst in the market conducts their analysis and estimates the intrinsic value of Iran Khodro Company's stock to be 650 rials. Well, the stock price is 438 rials. The intrinsic value of the stock is 650 rials. Right here, we want to perform the first analysis together. When the intrinsic value of a stock is greater than its current value, that stock is considered valuable. This means a stock always tends to move towards its intrinsic value. Now, if the intrinsic value is higher than the stock's value will increase until it reaches that intrinsic value. But if the intrinsic value is less than the stock's value will decrease until it reaches the intrinsic value. So a stock always tends to move towards its intrinsic value. And when you, as an analyst, know how to determine this intrinsic value, you can easily understand whether the stock is worth buying at the moment or not. This is the first analysis. We are reaching with our explanations. But with the knowledge of technical analysis, we will learn how to calculate analyses and how to find the correct buy, analyze, and sell points on the stock's price chart. So, as you can see in this slide, we say that technical analysis believes that the past is a guide for the future. This means that the stock's behaviors in the past will repeat in the future as well. This is actually a principle in itself, kids. A principle of technical analysis that we will discuss more about later. Always, any behavior that a stock has shown in the past, rest assured, it will repeat these behaviors again in the future at different times. The repetition of these behaviors leads us to a series of patterns that we call price patterns, which actually help us predict the future of that stock. We will also get acquainted with these fascinating patterns as we continue with this lesson topic. All right, so to move this slide forward and wrap it up, let me tell you two important points. First, the past is the light that guides the future, and this is actually the origin of the science of technical analysis. And the second point is that by comparing the market value and the intrinsic value of a stock, you can issue buy and sell orders, which is the basis of fundamental analysis in the capital market. Well, in this slide, I brought the same dinner table example that I explained to you, dear ones. We will move past this slide and enter a new topic. Now, have you learned what technical analysis is? What is fundamental analysis? What about the tools? What tools do they use? And we compared these two and said that if you are asked which of these analytical methods is better, you should never compare these methods with each other. You should never set them against each other. Technical analysis and fundamental analysis are integrated and complementary methods that can help you very well when used together.